Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be discussing gap trading. As most of you know, gap trading is by far the single best day trading strategy available in the markets today. In my course at Lazy Gap Trader, I teach two specific gap trading strategies. One is the morning gap trades, and the second is the gap fill trades. Now, I'm going to show you my gap trades from this morning, and members have the option to subscribe to my gap trades that they receive each and every day at 9 a.m. in the morning before the market opens. But in the course, I teach exactly how to come up with the same levels that I come up with, and this is something that when you learn how to do this, what I'm going to show you today, when you learn how to do this for yourself, it's basically a license to be able to make money for the rest of your life. I'm showing you a methodology centered around mathematics, centered around a specific way to come up with a price level where a stock is most likely to have a price reaction in the other direction. If a stock in the morning is gapping higher at the open, I'm going to help you learn how to identify the area in which that stock is likely going to find resistance and have a pullback, be sold short for profit. On the other side, if a stock is gapping down in the morning, I'm going to help you learn how to find the support level where that stock should have a price reaction in the other direction. Hence, we want to go long or buy that stock at that level. I'm going to teach you how to find those levels. That's what I teach in my course at Lazy Gap Trader, LazyGapTrader.com. You can learn how to do this for yourself. I'm going to teach you how to find the level of support where that stock should have a price reaction in the other direction. So let's go ahead and take a look at my gap trades this morning. Here's an email that went out to subscribers at 9 a.m. in the morning. Daily gap trades. I had 5 possible gap trades today. It's earnings season. So all these companies are announcing earnings, which is causing them to move either up or down in a large way, or at least some of them in a large way at the open, which provides us opportunity to trade those stocks. Apple, Twitter, Akamai, Hilton, and US Steel were my 5 gap trade opportunities I identified this morning. These were the best opportunities out of all the stocks that were gapping up and down at the open. I narrowed this down to my short list. As you can see, there's 5 names on the list, but only a couple hit their levels. We're going to talk about Apple because it's an interesting chart pattern. Twitter hit its level. Akamai hit its level. Hilton did not, and US Steel did not. Although US Steel came close, we're going to take a look at it in a minute. But Hilton's off the list because it never hit its level. And US Steel is also off the list. It was a no trade because it didn't hit the level that I specified. For example, 26.35 on US Steel was a resistance level. That's a level where you could have shorted the stock if it hit that level for a pullback or price reaction in the other direction. Other in this case meaning down. So there are some important numbers on this page. So Apple we're going to talk about. So the 105.14 is an important number. We're going to talk about that in a minute. Twitter 1570, that was a support level for Twitter. That's an important number. And Akamai was another gap lower, and the support level was 48.95 that we're going to discuss here today. So let's go over to the charts and let's start talking about the stocks. First, let's start with Apple real quick. So here's a daily chart of Apple, and I'm going to explain something to you because it comes into both areas that I teach in the course, gap fills and the morning gap trades. So basically what happened with Apple is they reported earnings after the bell closed yesterday. Today the stock was opening up a high enough percentage for me to get interested for a potential gap trade or morning gap trade, which means if I could find a level that Apple was trading into where it will likely have a pullback or price reaction in the other direction, that would be something I would be interested to do. Now I have 2 lines on the chart. The first line, which is thinner, is 103.91. That's a gap fill area. You can see on the chart that this area right here, okay, that's known as a gap fill. My first inclination this morning was that was going to be a good area to put out to my members as a resistance point in the morning, and that Apple should have a pullback from that area. However, it was after earnings and the stock was strong, And right above that was a more important level, 105.14. I teach in my course how I came up with the 105.14, but I also teach how I came up with the 103.91, which is a gap fill, and I teach which gap fills are better than others, which stocks this works the best with, all the things you need to know to trade the gaps successfully. However, I selected for my morning email to members the 105.14, but let's drill down a little bit at a shorter time frame and look to see what happened a little more closely. So here's a 5-minute chart, and you can see in the first 5 minutes of the day, the next 5-minute candle of the day, the market flirted with that 103.91, making a high of 104.35. That would have been well within our stop loss limitation that I also provide members, and I teach you how to derive on your own in the course. But you can see how we sold off from that, and just a little while later at 11:10 in the morning, the stock made a low of 102.79. That would have been a gain of over $1. I was giving a higher level. We would have had the same result had the stock got up to that level, but it didn't. But what this does is, even though I gave out the higher level to members, I also teach in my course exactly how to come up with the 103.91, and that would have been a great short opportunity, and people that took that trade, any trader who took that trade would have made money on that trade, and that's something I teach in the course that you can learn how to do for yourself. I teach you which stocks it works with, which ones it doesn't. I teach you everything you know how to do it. That's why I wanted to talk about Apple. It really fell into two categories, the morning gap trade and also a gap fill trade. So it was an opportunity to show both. So the next stock on the list is Akamai. So let's go over to the chart of Akamai. Here's a daily chart, and you can see my trend line across the screen at 48.95. That was the level I cited in the email that went out to members in the morning. And let's go over to a shorter time frame, and you'll see what happened. Here's a 10-minute chart. Okay, so in the second 10-minute candle of the day, now, mind you, this stock is gapping down at the open. It finished down 13% for the day. This level is down more than that. This level is down more like 15%. Okay, so from where the stock closed yesterday, I teach you how to identify the level where it's likely to have a price reaction in the other direction. 48.95 is the level this morning. The second candle of the day, we pierced through it. We made a low of 48.66 within our stop loss limitation. And in the next 10-minute candle of the day, the stock made a high of 49.60, representing a possible gain or maximum gain of 60 cents on a very quick scalp trade off a morning gap play. Now the stock ended up, now the trade's over by that point, but the stock ended up going a little bit deeper below that line, and as you can see, it fought that level all day, and then at the end of the day this afternoon, it recaptured the level and it went higher. And not only do I show you how to find these levels and how to make money utilizing these levels, but it also displays the power of these levels. You know they're powerful when I can show you how to find these levels and you can watch it for yourself work each and every day. Don't take my word for it. Learn the methodology, see it work for yourself, and then you can put your own capital at risk and trade it. But you have to see it work and paper trade it first so that you can verify that everything I'm telling you is 100% accurate. Don't take my word for it. Find out for yourself. This stuff works, folks. Now, the last stock we'll look at tonight is Twitter. Now, Twitter came into the level at the end of the day. In all fairness, in my course, I teach part of the strategy and what things to stay away from in order to stay out of trouble, where a lot of traders that went through my course probably didn't take this trade today because it hovered over the line of 1570, over the support level that traders would have found this morning or anybody would have received with my daily gap trade levels in the morning. It hovered over that level for long enough to where it was somewhat questionable. But I show you this so that you can see the power of these levels. Look at what happened once it hit 1570. It pierced through it by 1 penny, okay, making a low of $15.69. and then just a few candles later, a few minutes later, a high of $15.85. It doesn't sound like a lot, but in my morning email, I told you exactly the profit target to look for, and that was right smack in the middle of it. It's a low price stock. We're not looking for 30, 40 cents. We're not looking for $1. On a low price stock, we're looking for a little gain. Because it's a low price stock, we're able to buy more shares. So everything equals out over time. Hopefully this was helpful, folks. Come over, learn this method. It's gap trading at its finest. LazyGapTrader.com. Come check out the course for yourself. I'm David Frost. Thanks for tuning in, folks.